Well, yeah, let me ask you first of all here about the 20% we've heard so much about. Republican lawmakers say when they look at their plan, in concert with what the White House has proposed on its one-page list of principles, there's 80% agreement. What's in that 20% space that they don't agree on?
What they agree on is rate cuts for corporations and individuals and a variety of other sort of conventional proposals. What they don't agree on is the House wants to move to what's called the destination-based cash flow tax in place of the corporate income tax. It's basically a consumption tax that has the border adjustment that is highly controversial and that the White House doesn't endorse.
We've heard a lot about the potential here for income shifting if we were to see the White House's plan come to fruition. How do you prevent that from happening? The White House says it can do that, hasn't given us explicit indications of how it would do that. What are some of the ways it could?
The income shifting issue arises because the White House wants to cut the tax rate on business income, the top tax rate on business income, to 15%, while the top tax rate on wages stays in the mid-30s. And then that would give people tremendous incentive to shift their wage income into business income, basically by creating their own business and selling their labor services to their employer. It's a very difficult thing to regulate if you want to actually offer the 15% rate. One extreme solution would just be to say that all business income has to be treated like it has to be taken by its owners as wage income, which would stop the shifting, but then no one would be taxed at the 15% rate. It's almost impossible if you have a rate difference that large to stop people from taking advantage of it.
I want to get your sense of just the ambitiousness of the timetable for doing this. We've seen lawmakers revise their sense of when we could get some sort of tax reform or tax cuts through. Is this happening too quickly, do you think, when you look back at history and all of the time that was involved the last time that we had tax reform?
Well, even if you had asked me a month ago, I would have said it's pretty likely they would get something done this calendar year. Since then, of course, all sorts of things have happened that have delayed the agenda and made it harder. But even the pace of getting it done by the end of this calendar year would have been fast relative to what happens in the 1980s, where there were studies and commissions and proposals and then new proposals, and it took upwards of a decade then. And now, for some reason, they seem to be racing against time, but every time they try to do something, some other eruption happens in the White House that then distracts everyone's attention. So I think you know, an August timetable is ridiculously optimistic. Even by the end of the year, I think it's going to be hard. They have a lot to deal with at this point. In addition to all the White House attention, they have the debt limit. They have a number of reauthorizations they have to deal with. They still have health care hanging out there. So it's a very busy agenda, and it's not obvious to me they're going to get to tax reform all that fast.